Ladies and gentlemen, good day and welcome to the Rainbow Children's Medicare Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and 1 on the touchtone phone. To remove yourself from the queue, please enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, Siddharth.
Thank you, Rutuja. Welcome everyone to the earnings conference call of Rainbow Children's Medicare Limited to discuss the financial performance for the second quarter and half year ended September 30th, 2022. We have with us Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. R. Gauri Shankar, CFO, and Mr. Saurabh Bhandari, Business Analyst. Before we begin, I would like to share that some of the statements made on today's call could be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Quarter 2 FY23 results presentation that is hosted on the company's website and also on the stock exchanges. I would now like to invite Dr. Ramesh to make his comments. Over to you, sir.
Yeah. Very good morning to everyone. I hope you all had a good festive season. So it gives me immense pleasure to welcome you all to the earnings call for the second quarter and the first half of the current financial year. I hope, before dwelling on to the results, I would like to highlight the salient aspects of our operating model, given that we are a recently listed company. The Rainbow Children's Hospital has 15 branches across the country with 3 outpatient clinics in 6 cities. Having 1,555 beds, our pediatric services under Rainbow Children's Hospital include newborn and pediatric intensive care services, pediatric multi-specialty services, pediatric quaternary care including organ transplantation. Birthright by Rainbow is an integral part of integrated perinatal service within the Children's Hospital, offering normal and complex obstetric care, multidisciplinary fetal care, perinatal genetics and fertility care, in addition gynecological services. So Rainbow built on a strong fundamentals of a multidisciplinary approach with a full-time doctor engagement model, 24/7 consultant drug service in a child-centric environment. So this is the model, the Children's Hospital being built across the world on core principles of multidisciplinary, full-time doctor engagement model, and the children-only environment. So we follow a hub and spoke model for wider coverage of the city. The hub hospital provides comprehensive multi-specialty pediatric care with an advanced tertiary and quaternary care services, while the spoke provides 24/7 emergency care, large outpatient services, and comprehensive obstetrics inpatients. It includes a level 3 NICU services. The model has evolved significantly in Hyderabad city and is gaining traction very well in Bangalore. We plan to replicate this model in Chennai and National Capital Region in the coming years. We run the country's largest academic training program for pediatrics and pediatric super specialties in the private healthcare, offering postgraduate residential DNB training program and fellowship programs. We have a total of 128 seats across our group for training, and we further added in the recent months another 12 seats for the pediatrics and obstetrics and gynecology training program. So regarding the performance of the quarter, historically the second quarter witnesses a higher occupancy, patient footfalls, and a relatively robust financial performance. And we experienced a similar trend during the current quarter, with the strong growth is witnessed across all key operating metrics like occupancy, outpatients, as well as inpatient volumes across all the hospitals. Consequently, we registered the highest ever revenue, EBITDA, and PAT in this current quarter. Our occupancy for the current quarter was 62.2% compared to the 46.6% in the corresponding quarter of the last financial year. The matured hospitals, which are over 5 years of operations, had an occupancy of 68%, and maturing ones, which are less than 5 years of operations, had an occupancy of 48% for the current quarter. The occupancy for the first half of the year stands at 53% compared to 43% in the first half of last financial year. As stated earlier, the second quarter witnessed a higher patient footfalls and better occupancy, but the case mix was more secondary care in pediatrics. This shift in the case mix resulted in moderation of average revenue per occupied bed during this quarter. So the ARPOB for Q2 FY23 stands at 47,000, and the first half of the current financial year is about 49%. So there is 18% growth Q2 year-on-year of the revenue, and also the growth of EBITDA and PAT during the Q2 year-on-year is at 23% and 36% respectively. Our CFO, Mr. Gauri Shankar, will give you further details in a short while. Regarding our expansions, I am pleased to share that we have inaugurated 55-bed spoke hospital in Old Madras Road in Chennai City on 1st September 2022. This hospital marks the initiation of our hub and spoke model in the city of Chennai. The hospital witnessed good traction in the first month itself with impressive numbers of OPD footfalls. The new other expansions like the spoke hospital in financial district in Hyderabad city is near to completion, is expected to commence operations in Q4 of the current financial year. The project work for Central City Hyderabad and also Annanagar in Chennai City are progressing very well, are expected to commence operations during the next financial year, probably mid-financial year, halfway through. The next hospital, which is just we received the requisite permissions from the government, is in Rajahmundry, which is in the state of Andhra Pradesh, 100-bed greenfield project. The lessor will commence the project work soon at the site. The company has signed up an agreement with the lessor to construct an additional block of 50 beds in Hyderabad city, which is right next to one of our spoke hospital in Hydernagar. So to cater to future growth at this spoke hospital, because the Hydernagar spoke hospital has been running full most of the year and requires more beds. I also take pride in sharing with you that we have obtained the NABH certification for 2 more hospitals, therefore thereby having 10 hospitals certified by NABH in our network. We also have a country's first JCI certified fertility center in Hyderabad. To summarize, the first half of the current year has largely been as per the expectations. The business has returned back to normalcy with the operating parameters demonstrating strong growth. I wish to underline that Rainbow Hospitals continue to build a strong clinical healthcare model to deliver excellent outcomes for children. So with that, I conclude and hope to continue our conversation in the subsequent quarter in the new year. Thank you very much. Over to Mr. Gauri Shankar, CFO.
Thank you, sir. Good morning. First of all, I would like to thank you all for taking your time and joining our earnings call. As told by Dr. Ramesh, quarter 2 was in fact a medically busy quarter. We have witnessed a robust growth in our outpatient and inpatient volume and also in delivery numbers. On the consolidated financials for the first quarter of FY23, we have achieved a revenue of 550 crores as against a revenue of 512 crores in the corresponding H1 of FY22. The top line has grown by 7% over last year H1, and if we exclude the COVID vaccination one-time impact of the last year, our normalized revenue has grown by 28%. EBITDA margin has witnessed a growth of 14% over previous year H1 and stands at 191 crores. If we exclude again one-time impact of COVID vaccination on this, the real growth of our EBITDA is at 31%. EBITDA margin for the current year H1 stands at 34.8% as against 32.7% of the previous financial year H1. Profit after tax for the H1 of FY23 is at 100.3 crores as against 81.2 crores for the H1 of FY22. PAT margin has grown by 23% over H1 PAT margin of FY22, and PAT margin for the current quarter stands at current half year stands at 18.2% as against the PAT margin of 15.8% over the last H1 of FY22. Our OP volume has grown by 54% and IP volume has grown by 29% and delivery numbers have grown by 13% over the corresponding period of FY22. ARPA for the H1 of current year has shown a growth of 5% over corresponding period ARPA excluding the COVID vaccination impact. We have witnessed an occupancy of 52.76% for the H1 of FY23 compared to 43% of the corresponding period of FY22. When it comes to quarter 2 performance of FY23, we have achieved a revenue of 313 crores. There is a growth of 32% of revenue over the previous quarter and 18% over the corresponding quarter of FY22. EBITDA margin of the quarter 2 stands at 35% of the 35% for the quarter 2 of FY23, which is at 109 crores. So EBITDA has grown by 23% over corresponding quarter of last financial year. PAT for the Q2 for FY23 is at 61.5 crores. A PAT margin for the quarter stands at 19.6%. And PAT margin for the current year Q2 has grown by 36% over corresponding quarter of last year. OP and IP volume for the current quarter has grown by 55% and 35% over the corresponding period of FY22. We have witnessed a 62% occupancy in this quarter. A matured hospital has witnessed 68% occupancy, and new hospitals has witnessed 48% occupancy in Q2 of FY23. Though our international business is not very significant, we are seeing a growth in number of international patients visiting our hospitals for treatment. Our ROs, our return on capital employed and return on equity stands at 14.79% and 12.95% for the first half of FY23. Our payer mix for Q2 remains at 48% credit and 52% cash. In this quarter, we have capitalized the project cost of OMR Chennai, and we have incurred about 22 crores towards the financial district and Anna Nagar project, which are part of the CWAP as of 30th September 22. Also, we have spent about 2.3 crores towards the CSR expenses as against the mandatory spend of 2.4 crores for the financial year. We have utilized this CSR expenses for sports development, skill development, and providing medical equipment for government hospitals. Overall, Q2 was the best quarter, and we have seen growth in revenue, EBITDA, PAT, OP, IP, and delivery numbers and occupancy. Thank you once again. Now we'll open the call for your valuable questions and insights.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhiresh Pathak from White Oak Capital. Please go ahead.
Yes, thank you for taking the question and congratulations on great results. So this sharp improvement, although we understand the seasonality in the business, but just if you can further elaborate the increase in occupancy that we have seen, is this in line with what we would have witnessed in the past years as well, or this is some element of some, viral vector borne diseases or something of that sort which has impacted this quarter occupancy? And how do you see occupancy in the next 2 quarters for the second half of the year?
So the occupancy is what we have witnessed is definitely a lot more than what we expect in the current quarter, the Q2. So if we go back, the last 2 years have been the pandemic years, where the pediatric business has been impacted significantly because children did not kind of were not the sufferers of COVID. So when we roll back and see in 2019 that our occupancies were about 56% annually. So probably we're kind of limping back to the kind of a normalcy of our occupancies while growing or adding number of beds. So what we see is definitely that we're coming back. All the operating metrics are coming back to the normalcy. So that's what we see. In the particularly quarter 2, definitely because schools have started, there's a lot of viral infections which normally do not require admissions. Some of them, the presentation of these viral infections perhaps are more pronounced. Than committed pneumonia requiring admissions, which is why in our business you see that our ARPOB has come down compared to the previous quarter because of the secondary care case mix. So I think moving forward to the future, that we expect to kind of bounce back to the pre-pandemic of occupancies. And where we are now at this stage, about 50% of occupancy, we'll probably continue to maintain the similar. We may maintain the similar trend towards the end of the year.
Okay, so if you have the numbers with you, like FY19 and 20, what would have been the occupancy in Q2 and Q3 if you have those numbers, in front of you? Otherwise, I can take them later.
They are not in front of me, but they're kind of more or less kind of maybe 200 basis points plus or minus. So it would be a very similar. Generally, our pediatric hospitals, our business is about Q2 and Q3 are the more promising in terms of numbers, occupancies, and revenues. So certainly that the occupancy would have been higher that time as well.
Okay. So next question is in terms of new capacity. So this year we have the Chennai which is already commissioned, and I think in the last quarter you are expecting the financial center Hyderabad to commission. So those two would be the only additions for this year, right? And this Central Hyderabad and Anna Nagar, that would commission, like you said, in the second half of next financial year. So those two, 60 and 160 beds, would be the additions in FY24, or there is some other asset that is expected to come up in FY24, commission in FY24?
Okay. So there is the two which are in Central Hyderabad as well as Anna Nagar in Chennai. And also we expect to kind of have beds in Hyderabad city also. The next to Hydernagar Hospital, 50 beds are going to come. So there is some other kind of a brownfield projects which takes about 9 to 10 months time, which is kind of early to comment on those things. So this is what we have definitely.
So including Hydernagar 50, FY24 should see 210 beds commission. Is that a fair understanding?
That's right. Yeah.
Okay. And then FY25, although might be too early, but you mentioned Rajahmundry, which is 100 beds. And is there any other asset which you feel?
We have Rajahmundry, NCR, and the spoke in Bangalore. They are going to come in FY25.
Okay. Okay, sir. NCR is how many beds? It is, as per my understanding, 100 beds. And spoke is about 50 beds.
Yeah.
As of now, 250 beds in FY25.
Yeah. Some of the spokes vary. They may be 75 beds, especially regional spokes like Rajahmundry. They could be 100 beds because they themselves are large cities with a lot of catchment area.
Okay. And next, last question for Gaurashankar ji. How much was the capex for the OMR asset?
So it's at it is at 60 lakhs per bed.
Achha, it is on that same thumb. Okay. And what would be the total maintenance capex that you would do this year?
This year we do about 40 crores we should do.
Maintenance capex?
Yes.
Okay. Okay. Thank you so much. All the best.
Thank you. Thank you. Thanks, sir.
Thank you. The next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Hi. Congratulations on good set of numbers. Sir, I have two questions. So firstly, on the margins. So if I look at the first half, on a pre-Ind AS number, we are almost tracking at 30% EBITDA margin versus, what you have previously guided, which is closer to 25%. So if you can just comment on this, is this the new base that we are seeing? Or with the addition of new hospitals, we should expect this number to moderate in the coming years?
Oh, thank you, Ms. Desai. See, when we have guided earlier about 25% pre-Ind AS margins. So certainly that, the last year, not many of the beds been added. So the business have matured. If you look at it, our matured hospitals and also maturing hospitals also contributed significantly. So as we move forward with the addition of the new beds, definitely the business is probably going to go on the same way. Will obviously the it will get moderated to the 25%, 26%. So difficult to give a very accurate guidance, but I would stick to what is deliverable from the company is that 25% pre-Ind AS, which earlier I spoke on the calls. While growing, while adding more beds.
Okay. And so my second question is, on the utilization of cash. So if I see the run rate over the next 3 years, we could be generating close to, 1,100 plus crores of cash. Against this, our capex needs are closer to, 500 odd crores if we were to, expand the way you have elucidated. So what would be the utilization of the balance cash?
Okay. So I think we have certain plans which I've spoken earlier also, that we were actually exploring some of the greenfield projects, especially in NCR region. So once those things come into the reality, work in progress, probably we'll have a better understanding of that, utilization of the cash on the balance sheet as well as the net proceeds which we raised through the IPO. So, but whatever we when we look at it, it's definitely going to be a cash surplus company unless we do a more number of greenfield projects. The situation is now, since we have no debt, there's significant cash in the balance sheet, and thirdly that there is we are generating the cash through the operations quite significant amount, and all these things put together, that whatever we plan, whether it's asset light, greenfield projects, brownfields, or asset heavy, also including purchasing some land wherever there is a opportunistic opportunities are there to buy the land. So we are well within these funds. Of course, the last year we have done about 15% of the PAT as a dividend. So they'll have cash around. So it's a comfortable situation. I'm confident on that, what the things are going to go on.
So last question before I get in the queue. Sir, on ARPOBs, I understand, it's the case mix which has driven, the decline in this quarter. But if I look at the first half number, this is closer to 49,200, which is a 5% increase over last year ex-COVID ARPOB. Given that we have taken price increases in Q1 of this year, does this seem to be on the lower side, especially that, given that we had guided for, 7 to 8% growth on the ARPOB number? So what's the trajectory going ahead?
I think what we distorted is that, when we had this busy season where we're fighting for the beds, if you look at our ALAs have gone further down, because to accommodate more patients, a significant shift in the case mix. That is the single most reason for the kind of a moderation in the ARPOB. I think once we come back to the kind of a normalize the business, not so much of a bed crunch, we will kind of get back to the our 49,000 ARPOB, which is what actually we were expecting to do it.
Thank you, sir.
Thanks, Ms. Desai.
Thank you. The next question is from the line of Madan Gopal from Sundaram Mutual Fund. Please go ahead.
Good morning, Mr. Ramesh. Congratulations on excellent numbers. My first question is on how was it the beds added in the last 1 year in terms of occupancy, in terms of are they moving in line with our expectations?
Yeah, Mr. Gopal. Yeah, we are moving in line with our expectations. The good thing that actually is that we 2 years of difficult periods with the COVID in our pediatric business. What we are seeing is a pretty normal case mix. Either the OPD footfalls or the specialties, outpatients as well as inpatients and surgical work, even obstetrics. Our deliveries have come back to normalization, and all the good curves are pretty healthy now, both outpatient, specialty mix, and those things. So this is a great news. So that where we have control and the predictability is much better. So the other factors which are not in our hand is that volatility and also seasonality. Those things kind of play out kind of plus or minus.
So the payback period for these, what you expect, are they generally our payback period we say is 4 years, right? So are they looking like they can do better than that, or it's moving in that direction?
No, I think that's very ambitious to payback period of 4 years time. So it's a 7 years time.
Okay. And if the new hospitals that you are that we are planning to together, if I add what you mentioned, it comes to around 450 beds. That's the way. That's what the plan is, right? As of now, between 24 and 25. You think any further scope is there to increase this? You mentioned greenfield and NCR is possible. Any brownfield, like in the existing places itself? I happened to visit your Guindy facility and was congrats for an excellent facility. Actually, it was almost fully utilized when I saw that. What is the scope for increasing beds in the existing facilities itself or nearby in terms of adding beds?
Oh, we are exploring, but at the same time, it is in a very prime area of Chennai city, and I mean, we constantly keep kind of looking around what is available in the vicinity neighborhood, so that I mean, it's always good to add more beds where you are doing very well. So sometimes it happens, like in Hyderabad city, in one of the spokes, we got a great opportunity to add 50 more beds because that's also doing very well. So that kind of opportunity sometimes comes, sometimes difficult. But however, in Chennai city, we are adding about 85 beds in Ananagar. So that is not very far from the Guindy. I think that will balance out pretty well.
Okay. Great. Congratulations and wish you best of luck.
Thank you. Thank you, Mr. Gopal.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Damayanti Keria from HSBC. Please go ahead.
Hi, good morning. Dr. Ramesh, my first question is to you. So, beyond your proven model in the city of Hyderabad, now you're expanding into newer markets. So what gives you confidence that you will be able to replicate your model in some newer cities, say Delhi, NCR, or Bangalore? And how do you see competition scenario in these newer markets?
No, see, country is in need of children's hospitals. There's no doubt about it. That's number one. Number two is that when we moved from Hyderabad to kind of doing in Bangalore, and subsequently Chennai, then New Delhi. So it's kind of, it does take time when you go into a new city, but once you start settling, which is why we always go and do a hub hospital first, because that's what is going to differentiate you from other small, tiny children's hospital or maternal pediatric centers, because you're going as a multi-specialty children's hospital. So similar thing we have done in Chennai. So we go and do a multi-specialty at children's hospital, which would obviously take about 3-4 years time to kind of settle down, to do well as a financially, then start adding more spokes. So maturity is something which actually, time is something which is very important to build conceptually the model. So the requirement need of children's healthcare is phenomenal, so which everyone knows about it. We have done well in Bangalore, and we are tracking in Chennai. We just started doing a hub and spoke model, and the next both is NCR. And now in Delhi, that it took a little more longer time than the south. So now the Delhi is tracking fairly well, and kind of a credibility is going up. People come to know that there's a children's hospital model. So we're comfortable to go and expand in Delhi now further. So therefore, we're working. Our plans are to expand in the NCR rather than Delhi.
Okay, and so how about the competition scenario in some of these markets? Or you think your model is very unique and it won't be impacted much by what others are offering?
Yeah, I would say there's a competition when it comes to competition. There is some degree of competition will be there from the obstetrics side. But when we look at the model of ours, there is no competition to the rainbow model. But there always are pediatric services are there in a small wing in a multi-specialty or smaller children's hospitals. But rainbow going into a city with a unique doctor engagement model and also children-only environment services, and also building a robust intensive care services, multi-specialty, there is no competition in this area. So it takes obviously time, because children's healthcare is not something which is can be aggregated or orchestrated. It has to be built very organically. So we deal with a digitally native population, so the young population. So I think we need to kind of deliverables comes very, very important. So when we go into a new city, it takes time for people to get comfortable that what quality of deliverables we are doing it. Then the word of mouth, and then, it starts going very well. So that once kind of 4-5 years get passed, then the peak of growth happens in the 6 years to 8 years time.
Okay, and eventually you might also look at Mumbai market in future, if possible, right?
Well, as I said, there is a need and requirement in the country. But what is important is that, unfortunately, this cannot be aggregated. So, and also the specialist pool is beginning to increase in the country. 20 years ago, when we started, there were only hardly few specialist doctors who were trained in the pediatric subspecialties. So, now, recently, there's a number of institutions within the country, significant number of doctors coming outside the country to join us to build a model. So, therefore, that's very encouraging. And this requires a little kind of a more institutional approach, and business grows organically.
Okay, so that's helpful. My last question is a clarification on your payer mix, Mr. Gauri Shankar. So you mentioned 48% credit. So is it TPA, or you have some component of government?
We have TPA and corporates, and about 1% of our government business, and that's all the insurance only.
So it's government is just 1%, and rest are corporate and TPA. Okay,
Yes.
Okay, so that's helpful. Okay, thank you.
Thank you, ma'am.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, firstly, just on the professional fees to doctors, as I see, there has been sharp increase, almost about 67% year over year. So, any specific comment there?
So the increase in the professional fees is mainly because we are adding new facilities and also newer portfolios. So what we look at is overall professional fees across a group level. As a full-time doctor engagement model, so the doctor component of the professional fees will be 23% to 20, maximum 24. I think the first half of this year is about 23%. I'm comfortable with that.
Okay. Secondly, when I see mature and new hospital, the ALOS is lower, or rather ALOS is higher for the new hospitals by almost a day. So and is this a specific trend, or this will the ALOS in a new hospital to reduce to the matured level over a period of time?
Now, what happens is this matured hospital ALOS will be down in the busy quarters like this. The reasons is there is always a pressure on discharging early, so that's why the ALOS gets down. In the newer hospitals, there are beds. There's no pressure on actually for next day to admit more patients. So that's probably the reason a little bit of difference will come in the newer hospitals to mature hospitals.
Also, one more factor is that in the new hospital we have a cardiac institute which has got about 6 days of ALOS actually.
Understood. And just lastly, if you could break down IP OP volume as well as IP OP revenue into matured and new.
We have done that. We have, in fact, we have given that IP with the revenue as well as the volume.
As I see in the presentation, it's a volume, so not the revenue.
So revenue we have given that revenue of the overall revenue we have given actually.
So Tushar, about 70% of the revenue that we have mentioned would be the inpatient revenue, and 30% revenue would be the outpatient revenue.
And just further to this, into new and matured, any further bifurcation in terms of IP OP?
No, so Tushar, we generally don't give that. We give it at the company level, the IP and OP volumes.
Okay, sir. Fine. Thanks. That's it from me.
Thank you.
Congrats on
Thank
good
you.
service.
Thank you.
Thank you. The next question is from the line of Saket Reddy from Polisemi Enterprises. Please go ahead.
Good morning, sir. What are the ICU occupancy numbers for this quarter?
Industrial services?
Industrial services.
I think we have about, I do not have an accurate number at a group level. I can say one thing, our ICU occupancies have been around 55%, both pediatric intensive care and neonatal intensive care.
55%, is it?
Yeah.
Okay, and the Delhi facility, is it, are we break-evening of that?
Yeah, Delhi facility, yes. We are posting positive data in Delhi facility.
Okay, and the insurance hikes, we mentioned in the last call that some of the cities we are still yet to get some hikes. So are they done in this quarter?
I think Hyderabad is still to happen. It's yet to happen. Bangalore, Chennai, it happened. Hyderabad, we are
Bangalore, Chennai in this quarter, is it?
No. The Bangalore, Chennai has happened in the last quarter, and Delhi also. And Hyderabad is still negotiations going on because somehow there is a problem with insurance TPAs and those things because of post-COVID, they are really, really going very slow. And I'm not sure whether it is something they are stretching on too much. Because they expressly say about the COVID period, they have actually kind of taken their own toll. So we are pursuing. I think it will happen sometime, maybe in a couple of months' time.
Okay. That's all from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Piyush Payani, an individual investor. Please go ahead.
Yeah, hi. Good morning. So actually, my question is regarding that.
Interrupt you, Mr. Piyush. May we request you to please speak a little bit louder?
Hello. Now
Yeah,
you can hear me?
Yeah, I can hear you.
My question is regarding basically I want to know about the proportion, department-wise proportion, revenue proportion basically. It will be good if you can able to give me the department. So the second question is regarding, as I understand that pediatric is the main component of your business, right? So I want to know how much margin you are generating from the pediatric segment.
First question is that giving the granularity in a children's business. See, this is children's healthcare is very, very different, unlike multi-specialty. So, for example, a sick child comes into hospital. Does it belong to intensive care? Does it belong to a specialty, neurology or nephrology, or sometimes with combined admission? So, it's a granularity becomes very, very difficult. With the granularity, what we thought was always like your outpatients, your obstetrics revenue, which is intensive care revenue, and the pediatric revenue, pediatric surgical. So that's how we can have a fairly a good division. When you try to further divide into it, it's difficult to kind of dissect between the specialties and intensive care, because the specialty patients are in intensive care. So how do you put it, which pocket do you put it in? So that's the difficulty of still. So therefore, we kind of have taken a cautious decision about to have a clear pathways to kind of divide our business into the intensive cares and super specialties together, and the pediatrics and other allied, and the obstetrics and outpatient business, the four verticals.
So on the proportion, overall proportion, we have now segmented between the obstetrics and pediatrics. It's about 30% of our business is obstetrics business, OBGY segment, and 70% of the business is pediatrics.
Okay. And what about margin? How much margin you are generating?
So margin we calculate on the company as a whole. We don't again subdivide that between this. We don't prepare a P&L for these two segments separately.
We try to look at it. It's difficult because there's a pediatric component of the deliveries also. There is always a different fetal medicine department. It's a complex. It's a very difficult kind of a differentiator. Unless in children's hospital like adults, you have a nephrology, you have a urology. It's all very clearly demarcated adult healthcare. Adult healthcare is like a wear and tear problem. More of as we age, we get into problems of neurology, kidney. Children's healthcare is more of either congenital or infections or metabolic or various etiological factors. It's not wear and tear, which is why it's difficult to kind of differentiate between the specialties and intensive care. So we look at it actually. We look at it, but I think that it's probably appropriate and fair. And also, that is the reason what our consultant engagement model, all those things is we work in the teams. Teams generate revenue, they distribute revenues between themselves. So much easier, much fairer. So we always try to build our model is very similar to British Canadian model. So it's kind of doctors work for the institution takes care of the doctors. So that's what we balanced out in the last 20 years' time.
No, sir. Actually, my question came from the ARPO, right? If I can see the ARPO which is declining, if I compare with the last 2-3 quarters, correct? And if I am seeing that OBG business, right, it is growing. So I think as per my analytical view, basically, due to the increase in the delivery volume, because the ticket size, if I compare with the delivery and pediatric, ticket size is very less, right? So going forward, the ARPO will be declined since as per my understanding, the focus is shifted to delivery also, right? So ARPO, how it will impact ARPO going forward?
So, good morning, Saurabh here. So if you look at the ARPOB, so it is not declining. If you look at the ARPOB, basically is increasing. Whether you compare it on compared to last Q2 of last financial year, Now, if you look at, obviously X of COVID. Now, when you look at against the quarter one RPOB and compare it, quarter one RPOB will obviously be higher because what happens is your secondary care pediatrics, in the case mix is quite low in quarter one. So, for a company like ours, it is very important that you compare your RPOB on a YTD basis, sir. So, when it is 9 months, you compare 9 months of last year vis-a-vis 9 months of this year, rather than comparing it on previous quarters, because there is too much seasonality in the business, which will not give you a right idea on the RPOB. That's first. So our RPOB is increasing on a YTD basis. That's the first point. Now, on the second point, if you look at the pediatrics, also has a component of tertiary and quaternary care pediatrics, which has a quite substantial RPOB. It's the only secondary care pediatrics which is cold, cough, and fever, and which is seasonally pronounced in during the range time. So this is why you are seeing RPOB which is lower in this current quarter.
Oh. Okay, thank you, Saurabh. Thanks.
Thank you.
Thank you. The next question is from the line of Rahul Javani from IIFL Securities Limited. Please go ahead.
Yeah, thanks, sir, for taking my question. Now, sir, in the last call, you had indicated that typically 2Q and 3Q occupancies for us are 700, 800 basis points above the 1Q run rate. Now, this quarter, we delivered significantly above that. But what are you seeing in terms of 3Q occupancy? So do you expect to sustain, let's say, 60% kind of occupancies in 3Q as well?
Yeah, Rahul, this is a very difficult kind of answer because now as earlier explained to you that Q2 was definitely more pronounced than usual Q2 because of the first time children going back to school and various other factors. We had a torrential, unseasonal rains, seasonal rains, all kinds of things. So we had the very mix of viral infections in the community, which we have, I think it's seen even in adult healthcare hospitals also. Significant medical admissions have come into the Q2. So going into the Q3, I think what is important is that we would definitely do a kind of a better occupancy. But whether to do a similar ones or not is difficult to say at this point of the time. So as we move forward, the Q2 and Q3 occupancies will be higher. Sometimes Q2 will be more. Sometimes Q3 will be low. This kind of a season sometimes fluctuates and varies between the Q2 and Q3. One to other, it's difficult to predict. So, however, I think we are coming back. Good thing is that our normalized business has come back. Complete normalcy, we see it. And we are hoping to kind of do the other parameters which have been not done well is like specialties, obstetrics, and the surgical, some transplant work. All these things will start picking up. The occupancy is something that varies between the quarter and quarter based on the seasonality. But our interesting thing is our main business is coming back. So we're pretty comfortable about whatever the guidance we have earlier given for the year. That's what kind of we can say at this point of the time.
Sure, sir. So can you instead comment on the full year occupancies then? Because pre-COVID we were operating with 52% kind of occupancy level. So with the capacity expansion which we are planning out over the next 3 to 5 year period, would we be able to maintain overall occupancies at around 50 to 53%?
Yeah, that's what we're expecting about. It's a 50 plus occupancy is something different. Is something which we expect to do in the current year.
Sure, sir. And just on the seasonality again, now last year 4Q, we saw a very significant impact on our margins, and that was because 4Q is a seasonally weak quarter for us, while our cost base remained largely the same, due to which our EBITDA margins on a pre-Ind AS basis last year 4Q were around 16%. So this 4Q, do you see such a strong seasonal impact on margins this year as well, or do you think that this year 4Q the margins could be closer to our full year kind of guidance which we have given?
Oh, I think that it's not going to be that easy to say the fourth quarter how it's going to pan out. But I'm sure that overall, with the normalcy of the business coming back, it may not be so much tweaked. That's what my expectations are. So, quantifying or accuracies are pretty difficult at this point of the time. But earlier I said is that we expect to kind of drive our occupancies beyond 50%. And when you have that kind of occupancies, I think on a normal business, we expect to do well.
Sure, sir. And just one last question on the Delhi market. In the last call, you indicated that you want to convert the Rosewalk Luxury Hospital to a normal childbirth hospital. So how are those plans progressing? And then with respect to the NCR expansion as well, I think you were trying to acquire some land parcel in that market. So any update on that front?
I think that there is we kind of the number of people working on it. I think we still haven't got a clear indication that a finalization of it. We are working on it. It's a work in progress of the NCR expansions. Regarding Rosewalk, yes, of course, we are actually converting that from luxury to the rainbow model, so which is happening now. So we are recruiting more full-time doctors and also we kind of converting it as a kind of a Rosewalk by Rainbow rather than luxury hospital, Rosewalk as a luxury hospital. So this will take obviously some time to kind of to build numbers. So Malvinagar is going on well. I'm quite happy and satisfied the way things are going with Malvinagar. And we're able to kind of, there's a good traction in Delhi now. People kind of know about Rainbow, know about brand. I think the time has come for us to expand in NCR.
Sure, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Sumit Gupta from Motilal Oswal. Please go ahead.
Hey, hi. Good morning, sir. Thank you for the opportunity. I just want to know regarding the COVID impact in 2Q22 for the mature and new hospitals, the impact on the ARPOB.
This is about 9,000 impact on ARPOB. It was about 52,000 last year, 52,000 plus. And when you look at it the current year, half yearly, 8,643 rupees impact. So when you kind of adjust that COVID impact, so it will be about 49,000 half yearly this year, which is a growth of 5% ARPOB.
Right, sir. So just I want to know regarding the mature and the new hospitals, the impact of the COVID.
There is 1,000 rupees difference between mature and the maturing hospitals. So 8,000 rupees difference is there between them. What has happened is we have done more vaccines in the maturing hospitals because the maturing hospitals have got a bandwidth to do it because they are new hospitals, staff is there, doctors are there. So we've done a lot more vaccines from the new hospitals. That's we have enough manpower.
Okay, sir. Okay, sir. So second question is regarding the doctor retention model. So what is the retention ratio for the past 4-5 quarters, and what strategy do you implement in retaining those doctors with respect to the competitors? They also have a good brand, so they can attract talent from you.
Well, overall, our attrition is very, very, very minuscule. I think we don't track quarter on quarter or even year on year. We see it once in 2 years' time. I think our attrition is, what we look at is two things. One is at a consultant level. Consultant level attrition is pretty negligible. And the people who get trained and go out, and they are kind of a trainees and fellowship programs, which we cannot take them as an attrition. So of late, what we are trying to do is a significant number of doctors who have been trained with us for especially fellowship programs and even D&D pediatrics. We have been retaining them back into the system because They already know our structure and system philosophy. So that's going very well. So we're pretty comfortable with overall our ability to attract, retain the doctors.
Okay, sir. Thank you.
Thanks, Frank.
Thank you. The next question is from the line of Prashant Kutti from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity, sir. Just a couple of clarifications which I had. In the press release, you mentioned about some of the hospitals which are going to get added in the next couple of quarters in the next year. Just saw that Bangalore and maybe even the Bangalore facility and even any comments on Delhi was missing. So any thoughts on that one in terms of how the beds would be coming up over there? Because you've spoken about a couple of spoke additions in Hyderabad and in Chennai, and you've also spoken about a greenfield in Andhra Pradesh and one more spoke in Hyderabad as well next year. But any thoughts on Bangalore and Delhi?
Yeah, I think as the Bangalore, we have one hub and two spokes. The one spoke is in construction phase, and which is a greenfield construction phase. We're also kind of have a plans to kind of look out for one more spoke to add in the next 18 months time. So that's Bangalore. So probably Bangalore, and probably in about 18 months to 2 years time, we will have two more spokes. About addition of another 120 beds will be there in Bangalore.
125.
So, yeah, 120 to 25.
About 60 odd beds each.
Actually, yeah, that's how we think. So the NCR is something which we are actually looking at it. So probably in the next quarter, I will be able to give you a lot more clarity on the NCR.
Okay. And as far as Andhra Pradesh is concerned, you just spoke about one hub coming up. That's the only one which is there, right? Or were you planning for any other spokes?
So it's in the early phase of talk about other towns like Nellore and Kurnool. So we got a permissions to construct Rajahmundry Hospital. That's 100 beds. The other permissions we got the permissions. The lessor is going to kind of start the work, which will take about exactly 2 years from now to commence. There's a timeline which we agreed with the builder.
So just reiterating one point, sir. So typically, one can say that this year we'll add about close to 200 odd beds, and the year after that also we'll be looking at adding about close to 200 odd beds. And maybe FY23 could see a much larger increase in beds. That's a fair assumption.
Yeah, likely. Yes. Right. Okay. Some of the projects which are greenfield will take its own time, 2 years time. Maybe
2 year time will have to take into that.
Yeah, exactly.
Okay. And just one more clarification, sir. While you said that RBOP had the impact, obviously, of COVID, and also, like you said, the ALOS was slightly higher because that reason the RBOP kind of got slightly impacted. But I presume the price increase is largely already factored into the RBOP as of now, right? Or is there any element of price hike which is still left to be done?
No, I don't think there's anything left in the price hike for the current year.
The Hyderabad, the insurance, the DIPSA has to be signed, so that will give a little more revenue.
No, I wouldn't give up too much of guidance on the Hyderabad price hike. We are on, according to the TPS, they think that we are already on a very good price. So there is negotiation going on. It's too early to guide anything.
Okay. So basically, it's just a function of when the ALOS probably comes down, you'll probably see that normalization of the RBOP as well.
Yeah.
Thank you very much, sir, and all the very best to you.
Thank you. Thanks, sir. Thank you.
Thank you. The next question is from the line of Mahesh, an individual investor. Please go ahead.
Hello.
Hello.
Am I audible, sir?
Yes, Mahesh. Yeah, please.
Sir, I just wanted to know your cash position as on day. I mean, and what are your free cash flows that you will generate this year, and what are your plans with the cash that you will generate?
So we have about 500 crores as on date, the cash actually, and As we said earlier also, we have committed capital expenditure of about 600 crores. Now, we have had about 1,000 beds in next about 3 to 5 years we are going to do. And the cash accrued internal, we don't have any plans to borrow money now actually. And that's it actually. If any accruals are there, I think the board should take decision on considering the situation. The board will take decision on giving dividends.
Sir, also, is there any plan of any inorganic growth that you are looking at with this cash that books?
So inorganic growth is something which we are not negative about it. We are kind of obviously the opportunities have to be attractive and also philosophically aligned, where we can add significant scale operations, the scale to their acquisitions. Then absolutely we're fine with that. So because we have a model which is pretty well set, and we do not kind of want something kind of a different models where the difficulties are posed. So we're kind of cautious on that. At the same time, we are open and perhaps probably start exploring towards the end of the year or next year.
Also, sir, what was the free cash that you have generated in this 6 months, and what is your expectation that you will generate in the coming 6 months, I mean, by the end of this year?
I think the kind of quantitative guidance is difficult to do. I think we have already said that we would be able to kind of, I go back and stick to that, what we were able to kind of, our deliverables about 25% of pre-Ind AS EBITDA or 30%, 31% of the post-Ind EBITDA, 360 crores is something which we have expressly told, which will be achieved, definitely.
Fair enough, sir. Sir, one more slight doubt on this, that what are your operating beds currently? Because you are having somewhere around 1,700 beds, 1,700 odd beds. What are the operating beds among them? I mean,
sure. We have about 1,555 is the capacity beds, and we have 1,165 operational beds.
This is including the new capacity that you have added in Hyderabad.
Yes, not Hyderabad, Chennai, OMR.
Yeah, Chennai. Yeah, all right.
Yeah, so Chennai facility only opened in the last month in September. So we have taken the weighted average beds for this particular period.
So 1155 and the ARPOB would be somewhere around 50,000 balanced, if I am not wrong.
Yeah.
With a growth of 7%, 6 to 7%.
6 to 7%.
Fine, sir. Fair enough. Thank you, sir. All the best.
Thank you.
Thanks, sir.
Thank you. The next question is from the line of Dheeresh Pathak from White Oak Capital. Please go ahead.
Yeah, thanks for the question again. The rental cost, Mr. Gaurashankar, for Q2 in 1H is how much?
It's about 14 crore actually. So as I said, we take it as 5%, but difference between the pre and post Ind AS EBITDA. So it's 14 crore rupee rental cost.
So it is, last year it was, full year it was 60 crores. So this year there will be no escalation in any of the rental?
We will see now the Solinger has started actually. So that will come. Because new facility is there now. So it will go up actually.
No, in the base assets also, there is no escalation this year. Is it, when will the
escalation is not this one. See, we have got now some of the facilities, escalation is coming from Q3 actually.
Q3?
Yeah, Q3. So it's once in 3 years it happens actually. Some of the facilities are having escalation in Q3.
Yeah, no, so that is why I know, so it is lumpy. So that is what I wanted to know, that in the second half, is it going to be, how much higher? Because is it more of like a large percentage of the assets rental escalation is kicking in from second half? Or?
No, but still there you can keep that 5%, the difference actually on the overall.
Okay. On the new hospitals, sir, can you share the EBITDA from the new hospitals like you shared the revenue?
Unfortunately, we don't kind of give a guidance unit by unit, and what we broadly categorize is matured or maturing hospitals. I think the table on that maturing hospitals already, and then in terms of occupancies, in terms of the revenues and those things.
So among the new hospital bucket, is there any asset which is negative EBITDA right now, or all assets are positive EBITDA?
I mean, just started I think this year there are no new hospitals are not in negative, but for the rolling renewal which we started in September actually.
No, as of now, the hospitals which there's no negative contributor, the EBITDA, except the new one which started about a month ago.
Okay. And this OMR and the financial center, what would be there will be some drag they will have, right? Because they will not be EBITDA positive immediately. So what is the fixed cost in the OMR and the financial center hospital, just to have a sense on an annualized basis, what are the fixed costs in these two assets?
So we have about 2 crores of fixed cost to OMR.
Yes, sir.
For this year actually. So for the next 6 months, we are expecting about 2 crores of negative EBITDA from OMR.
So Dinesh, on the OMR, our fixed cost is about 1.8 to 2 crores a month. So, annually, you can take an annual cost on that. So it should be between 20 to 24 crores kind of cost for the OMR. On the financial district, it is it is too early because we are still yet to scout for doctors and staff, and everyone is yet to join. So at this point in time, financial district is difficult to get, but OMR, this is what the cost is.
Okay, when you say fixed cost, this includes rental, and this will exclude the variable payout consultant fees, right? The COGS and the variable payout is excluded, and everything else is part of it.
Yes.
Okay. Thanks. Thank you, Saurabh. Thank you.
Thanks, Dinesh.
Thank you. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Yeah, hi. Good morning, everyone. Sir, can you provide an update on extent of recovery both in IP and OP in the Bangalore cluster post the pandemic? Are we back to the pre-pandemic levels?
Yeah, we are back from the pre-pandemic level, both to IP and OP. Perhaps there is a growth in both the mature units like Maratali and as well as the Banarata Road. There's a new unit also kind of posting positive EBITDA.
Fair enough, sir. So basically the recovery in Bangalore is in line with what we would have liked to happen in FY23.
Yes, absolutely.
Okay. So and similarly on Delhi, it's been a slightly slower journey for us compared to the other markets. Have we completely sorted some of the initial challenges? And also parallelly, can you highlight some initiatives being undertaken to ensure better growth in Delhi?
I think that Delhi overall, our revenue is growing, clinical numbers are growing, and also kind of our overall the services like intensive care services have actually picked up much better. Obstetrics is doing very well, and specialty growth is something which kind of is yet to happen. So I think overall the property and cost structures are quite different from the rest of the country. So therefore, which is why there's some challenge on the profitability. But overall, as a business, you ask me how we are trending and doing in numbers wise, we are doing fairly well.
Right. Just to add to what Dr. Ramesh said, Alankar, the outpatient volume in Delhi, which basically is Madhukar, has grown 44% vis-a-vis in H1 of this year vis-a-vis H1 of last year. So there's growth in all parameters in Madhukar.
Fair enough. And one final question, any updates on the Guwahati plans?
Not yet, actually. We are still kind of working on it. It probably takes some time. I think, let me be honest.
All right, sir. Great. Thank you.
We have done some sweep shots, see how things are Guwahati. But there are two ways what we're looking at it. One is that brownfield projects, we couldn't find a really suitable building for us to enter into the city. And the greenfield is something which we thought we'd probably do it. It may take a longish time, but still probably that's an appropriate way. So we are to kind of start working seriously on the greenfield.
Understood, sir. Great. Thank you and all the best.
Thanks, Alankar. Thank you. Thanks, Alankar.
Thank you. The next question is from the line of Kapil Agrawal from ITIS Capital. Please go ahead.
Hi, sir. I have one question. So when I look at the ARPOB between, say, FY19, when it was about 26,000 to right now when it's about 49,000, there is some sort of normalcy over the time. I want to understand, considering this ARPOB growth is almost doubled in 4 years, I want to understand where is this growth in ARPOB really coming from?
Yes. Mr. Kapil, it's ARPOB growth is in the last 4 or 5 years' time. It's I would say it's doubled. It's about grown by 60%. So yeah, we have grown by almost 8 to 10% consistently last few years' time. That's because of the maturity. So a lot of hospitals are mature. Number one. The number one reason is that maturity of the hub and spoke in Hyderabad city. Number two is that adding more services like a quaternary care, doing transplants and those things. And third is that Bangalore turning around very well. That's another one. And there are more matured hospital beds than new hospital beds. That pandemic time we really did not do many hospitals. So, and also there is a pricing and also in better insurance negotiations. So, and also that significant increase in our brand, brand recognition has become huge. And the footfalls have come up a lot more to the outpatient department. So, combining all these factors together, I think that growth has happened year on year, almost 10 to 12%. So we come to a stage now where we are, which is why our guidance, what we thought is that our top growth will probably avoid kind of 6-7%. 4 or 5 years ago, we were a smaller organization. So we have become a kind of relatively kind of medium size now. So the shift has happened quite significantly in the last 5 years' time from a smaller organization to the multi-city and also robust growth and also brand recognition. All those things have happened.
Understood, sir. Thank you so much.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
So, thank you very much for all the participants of the call today. I mean, to conclude that, we had a great quarter and an excellent, we were able to post excellent results. But what's more important for me as a, doctor promoter is that to see that, that children are addressed and their health care needs are taken care very well. And also saving those sick children and newborns are something that's very, very important. And also recognizing some of the surgical problems early in childhood would actually start their lives completely. And also we are going to kind of bring them back and make them a kind of efficient with the normal health, bring their normal health back, and also reduce the disability for future. For example, a lot of undiagnosed, poorly addressed, neglected pediatric problems are going to pose problems later on in the life when they're in the prime age of 16 years to 30 years time. So that's where the children's health care is something which is a great need of the country, and also this is what is as we grow from now to future, this is one of the important metrics that, how we look at the Sensex. We need to look at our mortality rates of the newborn mortality rates, infant mortality rates. That's something very important for us to be a developed country in the world. Thank you very much, and we'll hope to catch up with you once again with the quarter three results. Thank you very much.
Yeah, and thank you. And should you have any question, please reach out to our investor relationship at rainbowhospitals.in. We would be happy to engage further with all of you. Thank you so very much for your time.
Thank you. Ladies and gentlemen, on behalf of Rainbow Children's Medicare Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.